Hey, what's going on, everybody? This is Dan Plata, CEO of Blue Skies Services. And today we are going over the target budget for the home cleaning industry. So, this is going to be an intro video of how to use that target budget, how the percentages got derived, how everything flows through. There are also specific tabs if you really want to nerd out that cover sales and marketing, that cover payroll, and that cover assets and liabilities. Um, those are going to be separate videos that you can totally nerd out on. I'll kind of show you how they interact with the main tab, but you don't need to use them. They're just there if you really want to dive in. But the beauty of this budget is that it's already pre-built for you on the percentages that a scaling home cleaning business should target. So it is your target budget for all of next year pre-built. And then as you get actuals, you can punch them in month by month and fill them out and see how you're doing against those targets. So it'll give you the goalposts to shoot for. So that said, I am going to share my screen, and this video is basically going to be me walking you through how to use this budget and explaining a couple things about it. So let's dive in and do some nerdery here. All right, so target budget for home cleaning. This is, again, this is like for recurring home cleaning. If you do, if you're a home cleaning business, and you do mostly one-time cleans, or that's your focal point, I would say use the window cleaning budget. That's more of a transactional type of cleaning. This is really built for recurring style home cleaning, weekly, bi-weekly, every 4 week style cleaning business. If you do janitorial, this will not be the right video for you. I'm going to film one separately. It's going to look the exact same, but the percentages for janitorial are different than for recurring home cleaning. So there's a separate budget sheet for that. So again, this is very specific to recurring home cleaning style business. All right, so let's dive in. So first thing to hit on here is you'll notice there's business days at the top. And that's super important when you're running a recurring style business, because as you can see, like March has 23 days that your cleaners are going to be going out and generating revenue, compared to February that has 20. So you're talking about a 15% revenue swing from one month to the next, simply based on the fact that there's more days in the month than the other month. So I say that just to make sure that's in the back of your mind. And then the other thing to always have in the back of your mind is, and this will be dependent on how you pay people, but I have this built for weekly pay right now. If you pay bi-weekly or every other week, however you pay, you'll want to tweak this. This is currently set up for weekly pay, but you'll notice there's months where you pay 4 times, and then there's months where you pay 5. And again, when you have that 5th payroll land in a month, it's a 25% increase in your payroll for no other reason than that month just had an extra payroll land in it because of the way the days fall. And so this sheet is built to capture that. That mathematical relationship flows through in the wage calculations in your budget. So you won't have a huge surprise when it's a 5 payroll month and you're like, man, I suck this month. Like the budget is built for you to suck that month in a way, just because you're going to get hammered with that payroll. So right at the top here is where you would enter your sales. You kind of go through month by month, and you can see I've got it made for 45,000, but we might say, well, we know there's 23 business days in March. So we're really going to get like a 15% increase compared to our normal lower level. And so let's just bump it up. I know that's not exactly a 15% increase, but you get the idea. And there might be some other months like June where you've got 22 business days in it. August, you've got 22 business days. Anyway, I'm just trying to show you how this thing works here. So you can adjust these, and this is where you manually type in your sales numbers. You'll notice there's this gray column, and it's just kind of mimicking the column above. There's a sales and marketing tab here that if you really want to dive in and like calculate what your sales will be, not just estimate them, but actually calculate them based on your repeat rate, your attrition rate of clients leaving, how much you're spending on marketing, how many clients skip in any given month, like your percentage skip rate, all of that stuff. If you really want to dive in to project what your sales will be based on all of those factors, that's where you do that. And if you fill that tab out, you'll see, I'll just go to it so you can get a quick glance at it. There's this quick little toggle here that says use. And if you switch that to use, then all these cells are going to override with what's coming from that tab. And if you take that out of there, then it's just going to default back to kind of this manual entry mode. So we'll keep it in manual entry mode for now. Definitely, I encourage, especially if you're running a home cleaning business, I encourage you to nerd out on that sales and marketing tab. You don't have to use it, but you should at least play with it because it'll help you think through how your revenue is generated and what all those impacting factors are. And if you go through there and you're like, what is my attrition rate? Like, then you should go figure out what that is and how to calculate it and so forth. So definitely nerd out on that sales and marketing tab. You don't have to for purposes of using this target budget. Like I said, it's pre-built. All you got to do is put in your sales here and then you're good to go. So you'll see now right below that, there's a spot to enter your actuals in. And so each month as you go, you would go into QuickBooks, download your P&L, and then enter your actuals right in here. There's two spots to enter sales in because you'll have two different kinds of sales. They're the same, but they're different, if that makes sense. So you can see we have cash accounting sales, and cash accounting doesn't mean you're accepting cash. It just means that those sales or how those sales are determined are based on when you deposit the money in your checking account. And that's what the IRS looks at for tax purposes. As a small business, assuming you're doing under $5 million a year in revenue, there's a 99.9% chance that when your CPA does your taxes, they're on a cash basis. So it's based on when the money comes and goes from your bank account, not on when the obligation is created. So that would be your cash sales. That would generally be what's flowing through into QuickBooks. Now, the other way to look at sales is how much you've invoiced, how much work you've actually done, whether you've collected the money from the customer or not. That would be your accrual-based sales, and that would be in your CRM. If you run an invoice report, depending on the CRM, it's named something different. So I'll just say if you look at your invoice report and how much revenue you've invoiced out that month, again, whether you've collected it or not, that's your accrual-based sales. And we generally see that when we look at all these expenses, it's best to look at them against your accrual sales, because the accrual is really like that's the work that you did, whether the customer paid you or not. And it's that work that you did that drives all of your expenses. So when you're looking at the relationship between your expenses and your revenue, we generally look at accrual sales. When we look at how much we're going to have to pay in taxes, then we look at cash sales. And this sheet does both of those things for you. So it's important each month to put in your cash sales, how much money got deposited in your bank account. That would be your sales number in QuickBooks. And then your accrual sales would be your sales number in your CRM, how much you invoiced that month. And it's unless you collect and deposit in real time every time you do a job, like immediately after that money goes into your bank account, you charge their credit card immediately, whatever you do, that's the only way those two numbers would be the same. If there's any time lag at all, those two numbers are probably going to be different. So moving on here, as far as like how to use this sheet. So again, it's pre-built for you with all the targets that you should shoot for when you're running a home cleaning business. So you can see we have cost of goods sold, which is going to be any expense that happens out in the field. The big part of that is wages. And in this case, I didn't break out payroll taxes or subcontractors or anything like that. I'm like, for sake of the budget, this is the labor percentage that I know I need to hit. 52.5% spent on wages, on the payroll taxes, on anything that is paying the people to go out and do the work. And then I put in 2.5% for workers' comp insurance. So kind of all in labor cost of 55%. But you can see we have costs for uniforms and apparel. You want your team to show up looking good, wearing a company shirt, whatever the case. Customer damages and repairs, you're probably going to break some stuff when you're out there. I was cleaning houses in our business a couple of years ago, and like back-to-back times at one lady's home, I broke a picture frame one time, and then I broke like an irreplaceable holiday ornament from the great grandma the next time. It was like the worst thing in the world. But it's going to happen, right? I was trying to be careful. I'm just a clumsy dude cleaning houses. So what are you going to do? But it's fair to budget for some of that stuff. You're gonna break some stuff. You're working in tight quarters in people's homes, and it's kind of inevitable. So we have a little bit budgeted for that. We don't have anything budgeted for fuel. In general, most people running these businesses aren't using company cars. If you are using company cars, you would probably put something in for fuel. In our business, we don't have company cars, but we pay a reimbursement to our employees for using their fuel. We just group it as part of wages because it goes through their paycheck. Merchant fees to collect money from your customer. That's part of doing a job, right? Is getting paid for it. We like to get paid when we go out and do work. So there's a couple percent built in for that. And then supplies and chemicals and tools and equipment, those kind of overlap. They can be viewed as the same thing. We break it down, and I don't get married to these percentages. I'd say 2% as a whole in this space would be what you'd shoot for. Supplies and chemicals would generally be stuff that you like consume and use up while you're at the job site. So the different cleaning solutions that you use, maybe you put rags in there, or squeegees, or mops, or like sponges and stuff like that. Tools and equipment would be bigger things that you use repetitively from job to job to job, like a vacuum or maybe a tote or something like that. So all in all, cost of goods sold, the things that you're using out at the job every single day, you'd want to shoot for 60%. And you can see that is built out all the way throughout the year, month by month by month. And as I mentioned, even the wages, we're shooting for 52.5%, but there's going to be months where it's lower. And then there's going to be months where it spikes because there's 5 payrolls. So you'll notice in April, February and April, we're saying we're going to do 45,000 each of those months. However, in April, our payroll is quite a bit higher than it is in February, just because we have that 5th payroll. So it's mathematically figuring that out. Likewise, March, we bumped our revenue up since there's 23 business days in March. We just said we're going to do more. It's only 4 payrolls, but we know that because we're producing more revenue, we're then going to have more wages. And so naturally, because it's using this 52.5% against that $55,000, it's got more wages built into March to cover that. So that's cost of goods sold. And then you can see there's a nice big open section here for you to enter all of those values from your QuickBooks each month as you go, so that you can see how you're tracking. The other cool thing to point out here is, let's say we did 25,000 in wages in that month. If we go over to the far right side, there are values over here, and it's not calculating, so I'll have to revisit that. But it will look at, because I don't have any sales in, that's why. So let's dump some sales in. Let's say we did 50,000 in January. So we outdid our budget there. We did 50,000. We paid 25,000 in wages. It'll then calculate what percentage you paid in wages, and if that was better or worse than your target. So our target is 52.4% effectively as it like rolls through here. We did 50%, so we beat it by 2.4. And then this is colored green. If instead this was like 35,000 and we got way out of line, now we're at 70%, and you can see it says we're 17.6% high, and it colored the whole bucket red. So it flagged this yellow, like this line item we're paying too much on, we're above our budget, and this whole bucket is in the red. We're at 70%. We want to be at 60 due to the mathematics of all this stuff. It ends up coming out at 59.9 because of the different rounding and stuff like that. But it's got that feature on the far right side, so you can see line by line, did you meet your budget or did you miss it? And then as a whole for the group, it'll color this green, yellow, or red based on whether you hit this target, missed it. It's got a 2.5% threshold. So if you miss it by 2.5%, it'll color it yellow to say like, hey, you're a little over, you're on the warning track. If you miss it by outside of 2.5%, it'll color it red. So just something fun to dabble with to give you like the stoplight effect and let you know how you're doing. So that's how you fill it out. You don't have to worry about those percentages. They should calculate automatically for you as you fill this thing out. And then it'll tell you what your gross profit is. So the importance of gross profit is that's the amount of money that you get to keep after you do a job. So every time you do a job, you have to pay those costs of goods sold. You can't go do a job without supplies, without labor, without paying merchant processing costs to put the money in the bank. All of those costs are things that you pay to go out and do a job. So once you're done doing that job, Now you have like discretionary money and you have to decide how you want to spend it. So you're going to spend it on 4 different buckets. You're going to spend it on marketing to keep growing. You're going to spend it on admin stuff to pay somebody to answer phones, or whatever the case is, to pay a bookkeeper to do a sweet budget for you. This one's free, by the way, so you don't have to pay me for this. But if you ever wanted our help with bookkeeping, you'd pay me to do this stuff for you. So admin, you'd have fixed overhead costs, which I'll show you in a sec what falls in there, and then you'd have variable overhead costs. So all 4 of those buckets, you have to decide how you're going to spend this gross profit, and then you want to keep some at the end of the day for a net profit to put into your pocket or to keep reinvesting in your business. So the first one we'll hit is marketing. That's like the easiest thing to understand, right? We're spending money on maybe some infrastructure like software, website stuff to make our marketing hit home. We're maybe doing some charitable donations or client gifts. I've got a little bit built in for charitable donations, nothing in for client gifts. The biggest one would be ad spend and awareness. So anything you're spending on Google ads or Facebook ads or Nextdoor or Thumbtack, Home Advisor, maybe like postcards or flyers or something like that. Like anything that's like a direct ad spend would go there. Then you also have the people that you pay to do some of the marketing work for you. So if you pay somebody to do SEO for you, or you pay somebody to do social media management or Google ads management or something like that, they would go under the marketing labor contractor. And you're expecting to get a return on that. The software and the website, like your GoDaddy, or maybe you use Responsibid to help quote stuff, like that is supplemental to your marketing, and it falls in the marketing budget as its infrastructure to help those leads come in, but you don't necessarily expect it to like have a conversion rate to it. So anyway, that's how we break down marketing right now. In a home cleaning business, we're saying about 5% of your revenue you would want to be putting to work on marketing stuff. If you really want to aggressively grow, I've seen people spend 10, even upwards of 15%, and they're just hammering home marketing. But 5% is like a good average target to try to keep grease in the wheels. And then again, there's a section to enter the actuals that you're doing each month. Admin bucket. So admin can vary a whole lot based on your business model and based on how you pay yourself. This 15% that we have in here assumes that you're paying either yourself or like a manager to run the business in the office. If you are not taking a wage, but you're running the business, your wage is really a distribution, and you would lower this to somewhere around like 5% or something like that. And you would expect your admin cost to be much, much, much lower. And then you would take a distribution out at the bottom of this sheet as like a cash outflow. And actually, I would leave that as 12. I shouldn't have overrode that. We have these override percentage and dollar columns here. So if you want to customize something, don't change this column. These are like the industry targets that I want you to be shooting for. But if you're like, I don't pay myself a wage, I just take distributions. So the only people that I have one office person, and I really want to pay them around 5% of my revenue. You put it into the percent override column here, and then it's going to do the rest of the work for you. And basically all these cells are meant to look at first the industry target, and then if you type something in the percent override, it's going to grab that. And then if you type something in the dollar override, it's going to grab that. So let's just for example, if I said, well, I have $2,000 a month I can spend on an admin person, it's going to layer that in. And again, because this is the wage row, it's going to look at how many payrolls, and it's going to take that 24,000 for the year based on 2,000 a month, and it's going to allocate it based on how it's going to land throughout your payrolls. So that's that. That's how you use the sheet if you want to override these target percentages without messing with all these other tabs here. That's what the percent override is for and what the dollar override is for. So admin bucket real quick, most of it's going to be wages. Again, I didn't break out payroll taxes or owner salary or anything like that. At the end of the day, it's all admin wages. So we're shooting for 12% as a whole in that admin section. You're probably going to have some payroll expenses or fees to Gusto or Sure Payroll or ADP or whoever you use to run your payroll. So some fees built in for that. You're probably paying a bookkeeper like myself to do your monthly bookkeeping for you. You're probably paying a business consultant, maybe, to do some work for you. I put a little bit in for legal services. Hopefully that's a zero. I think I even made a note that I said, oh, let's hope not. Ideally we're not paying for legal services and we're beating that section of our budget, but just put a little bit of fluff in there for us. And then the last big one would be office supplies in general. Printers, computers, paper, pens, pencils, stamps, whatever kind of falls into that bucket. You should be able to beat 1% per month. But that's what we've got built in there. Again, a section to put admin stuff in here, put the actuals in. So we're down to the last two budget buckets. We have fixed overhead and variable overhead. Fixed overhead is going to be anything that you are locked into or contracted where you like negotiate it, you make a decision, and then you pay the same thing month after month after month, or maybe once a year, but it's kind of locked in and it's not easy to switch or get out of. Things like insurance, rent, software, utilities. Variable overhead, the next bucket will be discretionary stuff where something comes up and you just decide if you're going to spend money on it or not. So fixed expenses, the biggest one is liability and auto insurance, any kind of overhead insurance that you've got. Rent would be another big one. Rent can be so different for different people. If you're running it out of a storage unit or out of your home or something, you can save a ton of money there. And then software expenses for your CRM or anything like that, where it's just not super easy to switch, and you're kind of locked in with the same monthly rate time after time after time. And then utility bills, phone bills, internet bills, just kind of those monthly bills that you're always going to be stuck paying. So overall, you want this bucket to be around 5%. Same with your variable overhead. Variable overhead is going to be like spread across a whole bunch of different little goofy things. In general, you want the bucket to be 5%. Don't get hung up on each individual percentage of each individual thing. I kind of scattered it so that there's something allocated everywhere. For these buckets, it's more about just managing to the whole, but to at least give you a flavor of what's all going to be included in variable. Education, events, leadership development, you're always going to be wanting to develop yourself, develop your team. So that's going to fall in there. Meals and entertainment, you really shouldn't have much of that. Those would usually be personal expenses. So a little bit in there, but not much. Obviously, employee engagement, super, super important when you're running a home cleaning business. Recruiting, I see people underinvest in all the time. And so make sure you have a healthy budget for recruiting to make sure you're stocked with A players. So we put 2% to recruiting, about $1,000 a month for a business that's doing around 500,000 a year here. Repairs and maintenance, like maybe fixing a vacuum, shop supplies, if there's tools and stuff you need in your shop to fix stuff up, miscellaneous taxes, license, permits. You're probably going to travel here or there, maybe not in 2021, who the hell knows. And then a little bit for travel meals. Again, what's more important is that you're managing the overall bucket to 5%. And if anything in here gets way out of line, then you can scrutinize that a little harder. And like I said, with variable, it's all stuff that like something happens or an opportunity happens and you just have to decide if you're going to spend money on it. So these expenses are usually really easy to cut. If you find that you're out of line, you can just look at where you're spending too much money and just start cutting stuff. It's harder to cut fixed expenses because they're usually some sort of infrastructure, right? Like if you're locked into a rent agreement, you can't just get out of it tomorrow all the time. So that's it. Again, a section to fill out the actuals. And now you have your profit. How are you doing from an operating perspective? This budget is built to have an operating profit of 10%, which for a home cleaning business would be right in line with where you'd want to be. You'll notice the months where we have 4 payrolls, you should really be doing more like 15% profitability. The month where you have 5 payrolls, it'd be great to break even. And that's just kind of the nature of the math there is when you get hit with that 5th payroll, breaking even is great. So don't be discouraged if you don't make money in a month where you have 5 payrolls. You're not supposed to. You just need to make sure that you're making all the money in the months where you have 4 payrolls. So now the bottom section of this, as you can see, if you feel like diving in a little bit farther, these 2 sections could be useful. So for tax purposes, I talked at the beginning about cash accounting versus accrual accounting. You're going to be taxed based on cash accounting. However, when we look at the P&L, we mostly look at it in accrual terms because we want to see, how we're performing against that invoiced revenue, not against the money that we deposited. So this is going to look at what your cash sales were at the top. If you don't enter those cash sales, this won't fill itself out. But then you also might have some depreciation or amortization if you have, especially if you have company vehicles. But if you have any other assets, maybe you bought a business and you're amortizing the goodwill of that purchase or something like that. It's a little more complex accounting here. So this would probably be something you get from your CPA, or if you fill out the asset and liability tab, that'll actually pull in here. So the asset and liability tab would be different assets that you have, different loans that you're paying down. And that would fill out different sections of this main tab. Again, just to go to it, there's a little toggle here to use it or to not use it. So you can fill it out and then just not use it, but actually go through the exercise of filling it out just for your own practice. And now I might as well, there's a payroll tab that you could fill out exactly how you pay all of the different people on your team. And again, probably worthwhile going through that exercise. You don't have to use it. You can toggle the use on and off. So even if you fill this out, it doesn't have to pull through to the main tab. Just can if you want to. So then the last thing would be the budgeted cash flows. Again, this is going to be based on your cash sales that are in there and your actual cash flows. Again, based on the numbers that you enter above. So budgeted cash flow, and especially if you're taking distributions, you can see there's a line in here to enter in your planned distributions and then enter in your actual distributions. This would be like if you pay yourself just by transferring money from your business account to your personal account and you're not running it through your payroll system and not paying payroll taxes on it, this is where you would enter that. And that's cash flow out of the business. It's not going to show up on your P&L, but it'll show up in your bank account for sure. So that's it. That's how you use the home cleaning target budget. You're shooting for 10% profitability. Again, this is built for a recurring style business. Be sure to check out the sales and marketing video. That'll probably be like down if you are on our website or wherever you find this video. Check out the home cleaning or recurring service model sales and marketing video. I think you like, even if you don't use that tab, there's just going to be some tasty information in there that you're going to want to get and understand as you think about how to grow your recurring service business. So that's it. Go check out all the other videos of how to use the rest of these tabs. If you need help filling this out, I do sell my time as a CFO to help people fill these things out. And if you're just looking through this stuff and you're like, yeah, I know I need QuickBooks and I know I need bookkeeping and this is all awesome stuff, I just don't want to do it. That's what we do at Blue Skies for our clients. We run multiple home cleaning businesses, window cleaning businesses, pressure washing businesses. We're in the game ourselves. We also have an admin team that I specifically run that does bookkeeping for the home service industry. So if you just want somebody to do your bookkeeping for you, hit me up, because that's what we do for our clients. And we, put everything into these sweet, sexy buckets and measure it and help our clients make more money. So that's what we do. In the meantime, just get this tasty free budget here, and you have your game plan for 2021 all laid out for you. So that's it. Stop share. I'll stop recording. Go check out the other videos. Thanks for hanging in there for that one. We'll see you guys later.